Hey guys, Trevor Hammond here with Sierra Pacific Mortgage, trying this Facebook Live thing. I keep doing videos and in the normal old-fashioned way, I guess circa 2015. And do your best to ignore this black eye that is a remnant from last week's soccer game. Apologize, I have a face for radio right now. Anyway, every week I host a mastermind group for some of our top mortgage professionals in the area. And I thought this would be a great topic to bring up just real quick on kind of on the fly because it came up in our discussion from one of our top advisors yesterday, and it's something that people talk about all the time in my world. Almost 20 years of helping thousands and thousands of home buyers and homeowners, and then through many loan officers I coach, helping vicariously many people. But interest rates on home loans when you're going through the process is my topic here. And what the topic was yesterday that came up was one of our top advisors had a call from a new client and said what we always hear. Again, 2 decades of this. I'm told I need to shop around for the best interest rate and talk to at least 3 lenders. I guarantee almost everybody who's ever gotten a mortgage or has tried to go through the process has been told this. So I want to give you a whole different perspective on interest rates, and it's something that we've been educating home buyers and homeowners on for years. I read a quote, by the way, staying on topic, but what are you doing so well that the world doesn't have a clue about and needs to know about is essentially what it is. And this is something we teach. And the first thing I want you to understand about interest rates, if you're going through the process, and if you're a mortgage professional or real estate professional, this can apply to how you improve your conversations and education with your clients. The first thing I want you to really understand, as I break it down like it really is you will never ever know if you got the best interest rate because you don't really know how interest rates work typically. You don't do this every day. You might do this 4 to 6 times in your whole life, and shame on the industry. Most mortgage professionals out there that I've known don't take the time to educate you and actually pull up a tool or show you how interest rates work. So the fact is, you go around calling all these people, getting these quotes, and you fall victim to whoever sounds like they have the lowest rate. And then at the end of the process, and you're signing your paperwork, you'll never actually know if you got the lowest rate. Because here's how it works. You get a quote, you go down that path, great, and by tomorrow the rates have moved. The market has moved. You could lock in at what somebody tells you is the lowest rate, and the market could improve over the next 7 days, and you could have gotten a better rate by somebody else who locked you in because they had their finger on the pulse of the market and were more of a market expert, or they just got lucky with timing. Hey, let's be honest, that happens too. But my point here is, number one, you will never ever know if you got the best rate. So to base your entire decision-making process on a rate quote isn't all that helpful, and it leads you to make other mistakes. Second point I want to make about interest rates is 6 months down the road, I am amazed, and you can ask yourself this, how few people know what their exact interest rate is. People call me 6 months later, 12 months later, hey, I wonder if we should be refinancing. Okay, well what's your rate at right now is one of the questions we need to ask, right? Out of 20 other ones. Very few people know. Well, it's somewhere between 3.75 and 4. Yet, if you think back to when you made that decision, you based borrowing hundreds and hundreds of thousands of dollars, whether you did it the right way or the wrong way overall, with given your short and long-term goals, on that one number. Yet, months later, very few people remember their exact interest rate. So keep that in mind. No shame, no blame on that. I mean, you have a lot going on. We all do. And remembering an interest rate on a mortgage isn't our top priority. But it competes against the fact that that was the number one thing you used to make your decision initially on how to borrow hundreds and hundreds of thousands of dollars and take out this huge pile of debt that you really don't want. The third thing I want to bring up to you is big picture. And again, this is something we do unlike really anybody else I've found in the industry, is take more of a financial planning approach and get you to think differently about your mortgage and the role it plays in your house. Whether you get 4.25, 3.75, 4.5, 3.875, this is not going to impact whether or not you retire someday when you want and how you want. Let's be real. It's not. So to simplify the decision, because it sounds like it's going to be an easier decision to make, if whoever has the lowest rate, lowest fees, I'm going to go with. But that isn't as important as the overall strategy, the financial strategy you take when structuring this huge pile of debt, your borrowing and repayment decisions you're going to make for decades and decades of owning real estate, because I see that as the number one mistake people make over the course of owning real estate. And it's your largest line item on your budget for most families. It's the biggest piece of debt hopefully you ever have in your life. And it's all to control the largest asset most of us will ever have in our lives. So to try to boil it down to an interest rate quote is just short-sighted. And I want fewer and fewer people, if I can have an impact in this country in my lifetime, it's to understand the bigger picture. And interest rates are actually only one important piece of structuring a mortgage, and a very small piece, I have to tell you, on who you should work with a mortgage. And for anybody, I see people joining on this. I've never done Facebook Live before. Sorry, black eye remnants from a soccer game last week. And so please don't just stare at this thing right here. So those are my three things. One, you'll never know if you got the best interest rate by the time you're at the signing table, signing all your paperwork. So don't just base your decision on that. Two, what was my second one? You'll never know if, just got sidetracked by this thing on my face. Thank you, Bill Burns, nice shiner. So I'll just go to the third one, summary. You can watch this again. How your interest rate gets structured, whether it's 4.25%, 4%, it will not impact whether or not you retire someday when you want, how you want, whether or not you're able to help your kids go to college. Because here's the fact. If your payment's $20 cheaper, human nature and behavioral finance and all that stuff that goes into how we handle our money and our decisions around money shows that will get absorbed into our spending before we go sock that money away. And that's just called lifestyle inflation. That's what I call it. So find an expert, make your decisions for the right reasons on how you structure this loan, and don't let it boil down to who quotes you the lowest rate, because it's just short-sighted. It won't be a big piece of that. So that's it. I wanted to keep this short. Now I'm starting to ramble. I wanted to get this out because this is a huge piece of a mistake I see people making. And this year is going to be a huge home buying year. In my opinion, all the smart people that I follow are saying it's going to be a big year in the home buying world. And I hope so, because it's an exciting time to be buying a home and owning a home. Things are great, but be smart about it. All right, take care. I'm wrapping up. Thanks. Bye-bye.